Hey everyone, it's Hunter Satterfield over here at CWA. I'm one of the partners here at CWA, as well as the Chief Investment Officer. As always, I am joined by Brad Sanders from Tectonic Advisors, and then also my fellow partner and the head of our investment committee, Brian Bortz. This is your August monthly update. For the month of August, the S&P 500 finished down 4.1%. Global stocks were down 3.6%. Domestic bonds were down 2.8%, and global bonds were down 4.0%. And guys, before I come over to each of you with some commentary on that, I think it's important to note that actually midway through the month, the S&P was actually up 2.5% through August, through the middle part of August, and then it did end up finishing down just over the past 10 trading days or so. So, Brad, I'd love to come over to you. What are you and your team seeing on the technical side as to kind of what happened there in the second half of August to create some of that volatility?
Yeah, what really happened was the Powell spoke after Jackson Hole, and I think there was a lot of hope by market participants that he might back off kind of the hawkish stance that the Fed has taken, and might even say something about not raising rates 75 basis points in September. And basically, after we started to see a lot of rollover in commodities, I think there was a lot of people hoping that the Fed was done. And he basically said what we at Tectonic thought he would say. He just said, we're inflation focused. We're not going to cut too early and make that mistake. And we're going to we're willing to accept some economic pain to tame inflation. And I think that phrase economic pain is what really kicked off the selling, which is kind of hilarious to us because they've been pretty clear about that the entire year. That's not a new thing. I mean, they've been saying that, maybe not explicitly using the word pain, but that just caused some volatility. And look, we've been talking about how this year is going to be volatile every month. So this wasn't a shock to us. I just think the fact that it dropped so fast, might have taken some people by surprise. But we mentioned a video or two ago, it wouldn't surprise us to have some more months like June every once in a while we go through all this. One thing to your point that we're paying attention to at Tectonic, the dollar is unusually strong right now. I've written about this in some newsletters and I talk about it as often as I can, but we're in a globalized economy and everything's priced in dollars. And when you get a dollar super strong the way it is, and then you have the problems they're having in Europe and problems in several Asian countries, you get what's called a dollar funding crisis. So all these countries, if anybody remembers a few months ago seeing all the riots in Sri Lanka, what happened there was the dollar's super strong, their currency's weak. They need to buy dollars to purchase commodities and food and everything they need to live. And they ran out of dollars and it caused all these riots and stuff. That's a very real thing. And if you map a chart of the US dollar versus the market, anytime the dollar spikes, the market sells off and vice versa. So we're watching the dollar very closely. If we get another rate hike and the Fed continues to push this on a string the way it is, and we continue to get a strong dollar, it is going to cause some more volatility overseas, which will inevitably bleed into our markets in some fashion. So that's what we're hyper focused on right now. And I really think the directionality of the US dollar is going to determine the success or lack of in the markets for the rest of 2022.
That's great. Thank you. And I think, Brian, coming over to you a little bit, I think from a perspective standpoint, obviously, this is kind of one of those years where our viewers and all of us that follow the markets are seeing, oh boy, we actually have a market that is volatile as opposed to what we've seen really over the last 10 to 12 years of just sort of just an upward trend in the market. I think that these periods that we're dealing with, obviously you and I were talking, about this before we came on. This is normal, right? These periods in a normal market and a healthy market, this is normal. And so from your perspective, I mean, can you give our viewers a little bit of a historical perspective on what we're seeing here and why this is just sort of normal as you go through economic cycles?
Sure. Yeah. Thanks, Hunter. I agree exactly with what you just said, that this is a normal economic cycle. It's a recession, and we haven't had a true recession for 14 years. And when you look back over time, I encourage anyone watching this video to just go to the internet and type in S&P 500, 10-year chart or 20-year chart, and kind of look at where we are relative to where we have come from. We're in really good shape. Short term, there's a lot of volatility, and we've talked about it for well over a year on these videos that we're gonna have volatility. But when you look at times like June, where the market was way down, you're going to have people come into the market that are going to try to take advantage of that short-term dip. And, you have a lot of buying that happened in June, and that new money is fickle. And so then you're going to have pullbacks whenever they get scared, whenever Powell says something from the Fed. Look, the Fed's going to keep raising interest rates, and they're doing that to protect us from long-term inflation, which I've shown a lot of our clients, the impact of inflation. And this is a good thing. It just is not fun to go through. So from a perspective standpoint, you take a step back, look at where we are relative to where we have come from over the past decade, 2 decades. And I think everybody's going to feel really good about where they are.
Yeah, thank you guys. It's really it's interesting as we followed throughout this year, and we continued, as y'all both said, to talk about volatility, to sort of see that actually play itself out. And viewers will be back in front of you next month. Obviously, we'll see that continued volatility probably persist here throughout the fall. So please grab us and tune in next month as we see what ends up for the month of September. Thank you so much.